Good afternoon, everybody, and welcome. My name's Tim Metcalf, and with me today I have Al Sisto, the CEO of Tern, Sarah Payne, Tern's CFO, Darren Imtill, CEO of Tern's portfolio company Device Authority, and Richard Vincent, CEO of FundamentalVR, another of the companies in Tern's portfolio. This afternoon's session is going to last about 90 minutes. We'll start with Al providing an overview and update on developments at Tern following the interim results that were released this morning. We'll then move on to a presentation from Darren and one from Richard covering Device Authority and FundamentalVR. At the end of the presentations, we will have the opportunity for a question and answer session. And I'd like to thank everybody who's submitted questions and observations in advance. Really appreciated. That's helped us shape the presentations. Hopefully a number of your questions will be answered, but if they're not, I've got some in front of me that people have sent in, but we would also like other questions. So if you've got anything that you'd like answered, please do use the Q&A button at the bottom of your screen and type it in. Obviously, with nearly 150 people at the moment, it's not possible to go to people individually and unmute them, but we do want your questions. So type them in. I'll be sitting there reading them, and we'll be putting them to the team at the end of the presentation. So without further ado, we'll kick things off. I'm going to start just with a very short video before we hand over to Al. Well, thank you. And with that, I will hand over to Al to get the proceedings started. Al.
Thank you, Tim. Thanks for everyone attending today's presentation. I appreciate your interest, and we hopefully will address a number of things for you today regarding the performance and progress we're making at Tern, and also identify some attributes of the portfolio companies that I think you'll find really interesting, and Richard and Darren have prepared remarks that are really I think important for our shareholders to see the progress they're making within their businesses. So with that, we'll move forward with the declaration statement. And I want to apologize in advance for our existing shareholders. There'll be some repetition. However, we have a whole new group that joined us through our primary bid offering. And I believe it's important for them to hear a little more about what we do at Tern and our investment thesis. So bear with me as I go through some of the existing materials that we may have covered before, but I think it's important for the new shareholders. I think as the video kind of indicated, we're in IR 4.0, the Industrial Revolution 4.0, and I think it's kind of fitting that we're here in the UK today, because Industrial Revolution itself was the 1.0 Industrial Revolution really started here in the UK when Thomas Newcomen developed the first real steam engine. and it was all about finding a way to make things more efficient. It was taking the water out of coal mine shafts so that they could mine more coal to, in effect, make more steam engines, and the industrial revolution that followed was pretty dramatic. What we're seeing today is the Industrial Revolution 4.0, and it's all about digital. And some of us look at it, and it started in the late 70s, but we're at a place today where 4.0 really talks about taking the advantages of smart digital technology, machine learning, artificial intelligence, big data, to create more efficient ways to connect ecosystems and customers and products for companies and governments around the world. And just as they needed more coal and more efficient ways to generate coal fired engines to fuel the Industrial Revolution, we're looking at this 4.0 from a Tern perspective, and really trying to understand and develop the idea of IoT as the basis for the culmination of the 4.0 digital transition. So at Tern, our vision is really to become the go-to investment company, the company that really entrepreneurs, particularly entrepreneurs who are trying to disrupt industries that are existing brownfield kind of markets, with this digital transition to make them greenfield opportunities, really change the way things are happening. And you'll see with the fundamental presentation and the Device Authority's presentation that these are two companies that are really at the forefront of changing the way people have been doing things for hundreds of years, in the case of Fundamental, and really looking at automation as a way to make things more secure and safe in the case of Device Authority. So what we think, where these are all happening is where we look for investments and opportunities to find young entrepreneurs and old entrepreneurs who are really trying to make a difference in the world that we live in today. And the reason why we're focused on healthcare and IoT in the industrial segments is that these are existing multi-billion-dollar markets today. We're not having to wait for the attributes of smart cities to manifest themselves in order for our companies to make market. We're really looking at industries like healthcare, where there's almost $500 billion of investment already, where the typical hospital has 70,000 devices that need to be connected, need to be protected, and from a surgical point of view, COVID has really changed the way these industries are looking at how they have historically done things, because we now need to have this contactless environment, this inability to gather en masse, the idea of making truck rolls to solve maintenance problems is no longer a viable way of running businesses as a consequence of what we have learned in COVID and what we are still learning from COVID. So we believe that by focusing our energies and our abilities in these two markets, we shall create returns and create opportunities for our shareholders that are unique and would be difficult to find on your own. The other side of what we're all about is the team, and at the team at Tern, I'd like to think of us as a group of operating people who have been entrepreneurs, started companies, taken companies public, bought companies, sold companies, as well as developed whole new industries around inventions and capabilities that we have been involved with in our careers. So within the group, I think we have probably more than 100 transactions in public markets, private markets, in terms of developing and delivering value to shareholders and creating value and long-lasting value in companies that we've helped create. So Tern and its team is all about finding opportunities that would be difficult to find on your own from an investing point of view, but then mentoring, monitoring, and helping these companies execute to deliver results that we believe will provide handsome returns. The value that we create in these companies really talks to the approach where we look for companies that we believe have a product and a capability that is relevant to today's market, that can change the way people do business or treat patients or secure their environments. And what we do as part of the initial criteria is not only figure out who these companies are and where we want to be with them, but we also start by trying to understand who is the opportunity for this company in terms of a trade sale, or at least becoming an ecosystem partner of great importance, where that big brother, big sister capability really changes the way the company executes and creates force multipliers that drive MRR growth or ARR growth. And MRR, or monthly recurring revenue or annual recurring revenue, is one of the key characteristics that is all about how SaaS, or software as a service, businesses are valued in today's marketplace. So we start with the premise of, who is this company? Are they really changing and disrupting a market? Is the market large enough? And then how do we accelerate through the business models and the roadmaps, particularly using product-led growth, getting customers to help us define what it is that the market requires to grow the business. And then we start to look at margins, because margins are really important, and developing the human capital to really maintain the momentum. And as Tom Peters said in his book, Search for Excellence, if it can't be measured, it can't be done. And so in terms of execution and looking at what we're trying to do with our businesses, we've helped them develop what is known as OKRs, or objectives and key results, into all of the businesses that we operate, from an investment point of view, to improve outcomes and really drive execution to a level which we believe accelerates the MRR growth and really provides our shareholders with capabilities within these businesses that are really unique in the marketplace. In terms of our current portfolio status, we have 5 businesses in our portfolio. Today, I'm not going to talk about Device Authority and Fundamental, because Richard and Darren will provide you with insights into their businesses. But one of the key characteristics of the portfolio that we're trying to develop as we bring companies in and develop those companies is create synergies between the portfolios, particularly on the technology side. All of our companies are, in one way or another, using artificial intelligence, machine learning, some aspects of augmented reality and virtual reality to create advanced ideas and solutions for the industries that they focus on. So I'll start with NVMA as one of our key portfolio companies. And NVMA was a company we looked at a few years ago as a services business, but a services business that had unique characteristics, a 20-year history in developing industrial controls and process control capabilities. And in the transitioning of this business, we now have a company with a product called AssetMinder, which we believe will be a leader in the field of remote management and remote measurement, and to provide operators with the key characteristics of machines and oil platforms and things in the field using remote sensors to create the ability to do preventive maintenance, as well as solve problems that are existing within those potential machine errors and things that occur. And we believe AssetMinder and the traction that AssetMinder is gaining in the marketplace is really going to transform NVMA into a much larger business than it is today, as it's growing and gaining market share with its products. Our next company is Wild Networks, and again, NVMA, Wild Networks, and Talking Medicines were part of our previous Capital Markets Day earlier in the year. And their presentations, as you will see from the presentations today, are available on our website. So there's far more detail about these companies. But Wild Networks, we're really excited about, as this is a company that we just exited with the business going through an IPO, an oversubscribed IPO on the NASDAQ First North in Stockholm. Wild Networks is all about providing internet access to the parts of the world where internet access is not available, and that's 85% of the planet, and where it's congested. And the strategy within the product offerings of Wild Networks really revolve around leveraging partnerships with low Earth orbiting satellites or LEO satellite providers to unleash data, transfer data, move data from one cloud to another cloud, using the satellites as a delivery vehicle, and the Wild Networks products as the receiving entity as well as the transmitting entity on the terrestrial surface. Wild Networks is now public. We are an owner of the public entity, and as we are able to release the shares from the public offering, we hopefully will be bringing some aggressive and handsome returns to our shareholders from the opportunity that was created from this exit. And lastly, Talking Medicines is our newest investment, and it's really focused on a very important problem and a serious problem within the pharmacological companies that are trying to now get the voice of the patient, hear what patients are saying about their products, their medicines in the marketplace, and understanding the outcomes that are critically important to improving patient outcomes as well as improving their products in the field. The medical industry spends over $30 billion in advertising, with the majority of it going not to the patient but to the doctors and the industrial sort of complex that surrounds the healthcare industry. Their insights into what patients are thinking about their products is very limited and in today's world almost unacceptable. And Talking Medicines is providing a capability that we believe is seminal in its offerings for insight into patients' beliefs, feelings, and emotions regarding the products that they're receiving from the brand giants in the pharmacological world that's out there today. We believe Talking Medicines will really make a change in the way people and companies who make medicines interact with each other. And again, this is a $30 billion market that they're addressing. So, that's a quick snapshot of our portfolio. And I want to just go to the first half progress. And I think, as I said earlier, SaaS companies today are valued as in measurements of multiples of their MRR or ARR. And I think if you look at our results in terms of how we aggregate it as a way to provide the capability for our shareholders to see progress and performance, we had a 75% increase in turnover. This is during a COVID period, 75% increase in turnover or ARR or MRR growth within the companies that make up our portfolio. This is a significant measurement of performance, as these companies will be valued on their recurring revenue criteria and the growth of their current recurring revenue criteria. On the other side of performance, we also measure productivity in revenues per employee, and that was up 53%. And this is using the increase in MRR and ARR plus the increase in the employee pool of 14%. So we had an increase in the total capabilities of the human resources within the businesses, but those resources also provided an increase of 53% in total productivity. And we think that this is, again, a critical measurement of SaaS market companies or world-class kinds of companies in the SaaS businesses. I think also with regard to self-reliance and growth, in the first half of the year, we invested just under £1 million in these companies to continue to support their growth as well as to support their market plans and market expansion plans, particularly in moving to North America. And then lastly, we IPO'd. We had an exit in Wild Networks, which we believe was an exciting new step in the growth characteristics and access to capital and access to new technologies that this IPO will provide for Wild, and those benefits we believe will transcend into benefits of increased value and increased relevance in the marketplace for our shareholders of the company and its ability to provide our shareholders with returns. So I think, in summary, we're really looking to create long-term growth opportunities for our shareholders through the investment in companies that are helping in the digital transformation of the industry today, particularly using these IoT devices, applications, and capabilities as a way to develop bigger outcomes, better outcomes, and more lucrative outcomes for the companies that use them. We're focused on the healthcare and industrial segments, which we believe are large businesses. And as a consequence of that focus, we believe we're creating a brand recognition for our company, Tern, and your company, Tern, in the marketplace, such that our deal flow has increased dramatically in the first half of 2021, with companies really interested in becoming leaders in these two areas. So as we move forward through the rest of the year, I think you'll see some additional opportunities for value creation through the companies and the actions and the customers and that they're securing in the logos in the marketplace. And we believe that this will be a very good year for Tern and for Tern shareholders. So with that, I will now turn over to the screen to Darren, and we'll start first with a quick video to give a summary.
Thank you, Al. Okay, thank you for the introduction. And hopefully everyone now can see my screen. And I think I've met and presented to probably some of you before, but again, thank you for having me today. And hopefully I've got an interesting and exciting update for you all today. Just by way, I guess, of positioning the opportunity, the challenge and the market, and I'll come on to some market data in a minute. I just wanted to emphasize that really where we operate is this bubble on the right-hand side. So we're focused on things, the scale and problem of things. And now with more things getting smaller and devices effectively proliferating throughout many industries, we're focusing on things. We're not focused on the enterprise as such as human identities. There's other companies doing that. That said, sometimes humans do need to interact with the data that comes from those things and the applications that they interact with. So we do have a requirement to make sure that we can work with on that side. But fundamentally, we're dealing with the scale problem on the right-hand side of things. And if you look at the market, just to touch on some of the data, so this is some recent data from IoT Analytics. The market is effectively sized today circa $4 up to $6 billion and growing. And you can see there that people, in terms of the IoT market, you've got software, hardware, security, and security is effectively called out as an independent category. But it is a big market, and getting bigger. And what's really interesting here, if you look at the segment, it's predicted to get even larger to 8 billion. Security is a big topic. It is a big conversation, and actively we have people talking about it. And I'll touch just by moving on in terms of the size of the market. It's still a big blocker or a barrier to effectively rolling out projects. Al talked about how the digital transformation continues to grow post-COVID. We're definitely seeing that in terms of the engagement. We're now seeing, customers moving from their original project to multiple projects is a good sign of that. But security is a blocker. And we absolutely see that when we're talking to people. Sometimes it's an afterthought, sometimes it is a forethought. But it's clearly sometimes absence from projects, and we see people, getting stuck where they might have gone through a POC or a pilot. They've made their application choice. They know what devices they might be hooking up to the application, but they've not thought through the security. So I think, with regulatory requirements, effectively with mandates, with the new Biden order, just as a good example, there's a great reference of that in a blog from the IoTSF, which we're founding members of. All of those things help raise the awareness and educate the market. And I think, as those things become law rather than best practices, alongside new standards from people like FIDO and others, trying to help customers look for, adoption technology or adoption practices, it will help effectively educate, do the right thing, and make security become effectively more widely adopted and unblock many of these projects. So if you look at the opportunity, why we see it as an opportunity, and I just wanted to sort of talk to this a bit and just build out some of the things. Again, if you've heard me talk before, but just by way, we focus very much on the application side. And these enterprise applications need trusted devices and trusted data. And you saw in the video, you can't trust the device, you can't trust the data. And, and data is so important to people. Not only is there regulatory requirements and compliance needs, but absolutely, in many cases, it's the IP, and it's critical, especially in the medical world. When you're looking at patient data, it's critical that is secure end to end. And people and customers need to make choices, and they have the ability to work with someone like us, where they could effectively use us as a standardized solution for retrofit and new devices. And these two markets, and it's quite interesting, we've spoken to many people who are looking to bring new products to market. They still got to go through their approvals, they're going through their business case, and security at least is factored in. But retrofit, i.e. for existing devices in the field, is really important. People are not going to throw out or rip up, write off effectively their old devices. They need to think through how they can build and improve security posture, and we see that happening more and more. And as people look for new projects to deploy new platforms or new technologies, including security, they then look to retrofit that to some of their traditional based methods. And zero touch provisioning, people don't want to touch. The scale problem effectively causes an issue. As there's more devices and more sensors, some you can never touch because they're going to be in the wild, in oil rigs, in ovens, in refrigerators, on cars. You need a way of onboarding these devices easily without lots of people thrown at it because of the risks and the costs. And you need to, effectively have a zero touch provisioning service, again, that's built into our platform. And that's really important to make it work. It's a feature that everyone takes for granted, and fundamentally they need it. And then you're into the life cycle, and I think this is coming home more and more. And you see the market, talking about the life cycle of IoT projects now. It's not about just dealing with the provisioning and the security when they come on board and touch with an application first time. It's how do you do that through the life cycle? If you just take a car, there's a manufacturing life cycle, then there's an aftermarket. How do you deal with the transfer of ownership of that car through multiple owners when it touches, various depots or garages and different owners. So thinking through the life cycle, is very important. And, as I mentioned before, people are now effectively deploying in more complex environments and disconnected environments. And what I mean by disconnected is a good example is a ship that comes online when it connects to the dock, but then goes out to sea for several weeks, sometimes months, and doesn't connect. So it's quite complex. How do you manage the security posture, and how do you secure the assets and even the sensors and the data coming from those sensors on a ship when it's online and then it goes offline without human interaction? It's challenging, and people are trying to figure out how they do that, and that's our opportunity. So when you look at Keyscaler, and you'll see yesterday actually we launched a new website, and you'll see we've adjusted our tagline. We're very much, the edge is increasing in size, but also going further to the edge. So we effectively work at the edge back to the enterprise, providing trust and, more importantly, automation, taking away the human error, which we've seen, frankly, when people look to manually deploy certificates and then they expire, and then people don't realize, and that is a massive human error if that was a known vulnerability. And so then it's provisioning at scale, and I've touched on that a few times already. How do you secure provision at scale? And then the identity lifecycle management. How do you make sure the identities are effectively provisioned, but also managed through the lifecycle? Identity is effectively the new perimeter, and you need to have the agility to change, as companies bring on new devices, turn off new devices, onboard new applications, buy new businesses, roll out new business models. So effectively, that's think of those three key things that we're doing for organizations. And you might have seen this slide before, so I can only apologize if you have, but I think it's really important, and I want to bring this back to effectively where we live and where we operate. We're on the right-hand side, typically in the data center or in the cloud, connected to the application. We work closely with customers who've already made their choice of their application. That could be Microsoft Azure, it could be AWS, they could be building their own IoT application, for various business models, connected tools or connected cars, and then they look to deploy that in AWS or Azure, or even Google. We have some people now talking to us about Google Cloud. And then it's how do you easily integrate and leverage what they're doing with their application choice. And this is really important, and you can see all the type of things that we do for people. But on the right-hand side, I just wanted to emphasize how important this is. Enterprise integration, what do we really mean by that? Well, people have already invested significant dollars, made significant investments in security policies and in security infrastructure, such as HSMs. They've already made that investment where they're looking to manage keys in the enterprise, and they want to leverage that investment for their IoT use cases. So having that integration is critical if you're going to solve the problem for the customer. And I'll give you some examples of that in a minute. And then effectively, it's about how you connect those devices in a secure way and manage the credentials on those devices. And we do interact. Sometimes we can get on the device. Sometimes we're working with the security material already on the device. And other people, and you've seen us talk about partnerships, are trying to figure that out. So on the left-hand side of this chart, we're really talking about how do people look to provide some sort of security root of trust. So you hear things like secure by design or secure manufacturing, and we have partners in that place who are looking to put keys, and chip vendors is a good example. So you have chip vendors or device manufacturers who are trying to figure out how they can provide a root of trust. But that doesn't solve the security lifecycle management or the security issues that the customers have got. So think of it as we are solving the pain point and the issue for their customer's customer. And when I talk to them, that's exactly how we both talk about it. So effectively, it's joining the left with the right at scale, providing the provisioning, the secure lifecycle management, and fundamentally the automation, taking humans out of the equation because it's too big to manage. So I'll just give you some examples in terms of verticals. We've given some examples before, I think, about medical. But medical is really important. You're dealing there with patient safety, patient data, HIPAA compliance, and there's a number of key things that the medical companies, they're coming out with new devices. Some of those devices are becoming masters, and then they have slaves or edge devices hanging off of the application stack in a medical room, for example. So then you've got to figure out how do we deal with the application on the major device and then deals with some of the edge devices. We can do that. See, there's some of the new use cases, some of the people that we're working with are looking to deploy that in the future. And then if you look at the industrial space, we work with partners like InVMA and others, but industrial, I think it effectively is a significant sector. Many people are looking to choose to deploy Microsoft Azure. There's a lot of edge devices. Some of them are, very much constrained devices on oil rigs, sensors and other things. So how do you deal with the end-to-end data encryption when that data is effectively your oil, the new oil? It's your IP. It's very important, and we see a number of edge use cases coming out from in that industrial space. And then transport. I've touched on automotive, and now we've got a new use case and a new customer working within the marine. I gave you an example when effectively the ships, dock in and dock out, and it's very important that they can manage the data and the security of those assets effectively as that ship is out at sea. Then when it comes back into the dock to connect to the application. And if you take the car, and I think this is where we've worked very closely. And Al touched on product-led growth strategy, and that's a fundamental strategy in the way that we evolve and develop our product. And we've got some good examples there where we've worked with a customer, who won his first automotive client, and they're looking effectively to bring their own key as an initiative to the automotive client. They're now working on their second. They're now going to a pilot with their third. And each time they have to deploy the security architecture, leveraging some of the investments those companies already made. And it's very simple for us to make some feature enhancements. So effectively working with customers, looking to build out their revenues to their customers, and that's really important. And that's a good example of product-led growth, but it's also a very good example of how we look then to get incremental and increase ARR, annualized recurring revenue for our existing customers. Not only as they look to go from pilot to production, but also as they look to win on new customers. And that's becoming important to us. So in all of those examples, critical safety is typically one thing we're solving. Sometimes it's a retrofit solution. Sometimes we're helping people connect a new engine to an old model. Now that is a retrofit example, but it's also a great ESG example where people are looking effectively to do more for the environment and bring out new business models. So as they look to deliver electric engines to diesel trucks, for example. So there's a number of things where we're looking to help solve pain points and bring out new business models for some of the customers that we're dealing with. How we license our software, Al talked about this. We are a software-only company. We have a software subscription. In the last 6 months, we've modularized our base platform. We have a lot of functionality in our platform. Not everyone needs it all to begin with, because half the time they don't know what they don't know. But we give them a pay-as-you-grow model, a software-only model. They can subscribe to the bits. Typically, people start on the identity side, and then more and more people want to use the data security and the security updates. And sometimes it's very important they want the HSM integration for the investments they've made to connect the people bit back to the data from the devices. And soon you'll see us bring out an extended license for Keyscaler Edge, and I'll talk about that in a minute. But this is all about really pay as you grow. You have a base license and you have the device licenses, and it makes it flexible for people to adopt. Even some of our partners are looking to OEM our software into their business models. IoT is a very vertically orientated market. You'll see that from when you see Richard's presentation. Security is a horizontal, but we're working with primary verticals. We want to make it easy to consume and easy to use our software. So modularization has effectively made it more flexible to do that. I wanted to touch on the ecosystem because everyone the IoT market is an ecosystem. And this is how we look at it now. And I touched on some of these categories as I've walked through. And secure by design. And I know some of you look at our partnerships, why are they important? The really important ones to me are the ones that help our technology get deployed in the field by having the right technology partnerships. And some of those customers are asking for us, or they are asking our secure by design partners to build a connector to Keyscaler. It's music to my ears in the last couple of months, when a significant global retail organization has told us, a certificate authority, they have to build a connector to Keyscaler if they're going to remain as an incumbent going forward. So secure by design from their perspective is important. We need the ability to establish roots of trust and work with different keys and different materials. I can't decide all that stuff on the left. I just need to work with as many people as possible. And our approach is either partner or, more importantly, customer driven. And most of the time, customers are dictating the partners. I'll just pick out a new one that's around the corner. It is a trusted objects. That will be a great software-only solution and a software-only connector, a software root of trust connecting to the software lifecycle management system, Keyscaler, for customers. And you'll see news on that coming soon. On the enterprise side, I've touched on this already. Microsoft's a key player, and I'll talk about that in a minute. We've done a number of connectors on the CA side, but this is important because customers have already made choices. And in most cases, they make the certificate authority, for example, after they've made the application, the security choice. They don't all want public CA. Sometimes they want private. Sometimes they want tokens. So we have to work with the application partners as well. So it's important that we have those things in place. But a good one to look out for, again, around the corner, and we're doing some joint development work, is with CyberArk. CyberArk has been working on the enterprise people side for a long time, doing privileged access management for enterprise use cases. And now there are use cases for privileged access management, because it's all about identities and giving people and things privileged access in that market. So that'd be something else that, to look for, and you'll see hopefully some news. But at the end of the day, we need go-to-market partners. So people who are going to take our solution and their solution through their vertical markets. So those are the most important partners to me, the people who are building out go-to-markets. I'll just give you an example. So BSI. We just went through a whole go-to-market enablement piece last week. BSI is very much focusing on Industrial 4.0, key paradigm and a key market that Al mentioned. It's a global organization. They're very much focused on cybersecurity, a great consulting partner for us, and they're looking to deploy technologies. As I said, we kicked off the enablement piece last week, and you'll see more news, and they're actually going to be presenting at our conference. So SIs are important in terms of how we take things to market. So this is how we look at the partners, and you'll see us evolve this and the partnership model on our website and on our programs coming up in the recent weeks. So I touched on Microsoft, and I know this comes up a lot. Microsoft is a choice made by enterprise customers and SIs, frankly. Microsoft is already at the table in many cases. They've got some tremendous tools and utilities. We have been asked by Microsoft, and in many cases customers, how do we build certain connectors? So for example, Key Vault, how do we, customers are moving to the cloud. They want to park or end of life some of their physical on-premise HSMs. They want to move them to the cloud. You see the HSM vendors scrambling for cloud solution. You see Microsoft doing the same. And we're trying to make this easy and seamless for customers to make choice. So you'll see Microsoft is important to us, and it continues to remain very important, and it still touches 65–70% of our pipeline in some shape. And those are the primary verticals, again, all big with Microsoft. So I just mentioned Edge, and I just wanted to just give you a bit of a flavor. The Edge is really, think of the Edge as leaf devices. So you might have a gateway on a car that has sensors, or you might have a gateway that has a number of sensors connected to ovens or lights in the street. In a smart city or in a smart factory, you might have sensors. So effectively, the edge is about extending further to the edge, more sophistication at the edge. But not everyone wants to do everything at the edge from a security perspective, but they do want to be able to provision basic levels of security. And in some cases, they want to be able to upload only the relevant data and secure data. Al touched on, artificial intelligence and data analytics. This is becoming really important. So, so we've been working the last 6 to 7 months. We're now in beta. We will have an edge capability that extends our current offering, which is effectively a lightweight offering that you will see come out in recent weeks. So I just wanted to give you some headline for that. And then our summit. So before, many of you attended our summit, or you've seen us present our summit. We had a number of key people and key prospects that have now turned into customers since the summit. We're targeting 3,000 people to register for this event. Very important to us. We've got a number of key speakers from Microsoft and others. Venafi, JetStack, BSI, and Jitsuan, another partner that you'll see that we're working with on an SBOM initiative. This is really important to us, but it is also to our ecosystem. And we're going to try and make this the RSA event that was on the cybersecurity side for IoT. We have people who actively want to participate in this program. So look forward to that next month. And again, you'll see key analysts participating. And then finally, I talk about analysts because it's not just what Device Authority says or what some of our partners say, but analyst recognition is really important. And you'll see the Smart Matrix, and they'll again be presenting at the conference. But the Smart Matrix is, is tremendous affirmation really of the progress we've made. You know, the people have moved right, Device Authority moved right and upwards. Our customer impact and the customer use cases that they evaluate, this is independent research they do, but also our technology leadership. And you can see some of the other people that are appearing effectively, you know, creating more distance from where Device Authority is. So, you know, we're delighted to be up there. We've worked hard, we aspire hard to get there. And I think with the traction we see, with the relevance we take to Microsoft and with the new use cases and the verticals that we focus on, you know, I think we're getting tremendous endorsements for that. And whilst I touched on 3 verticals there, you know, final one I would say is look out for retail. I think as Edge becomes Edge with Leaf devices, you know, I think retail will be another exciting sector to look forward to. So without further ado, I will pause and stop and be back available, and I will pass you on to Richard.
Darren, thanks very much. That's great. Thank you. If you just let me share my screen, that'd be great. Yeah, so thanks for that. My name is Richard Vincent. I'm the CEO and co-founder of FundamentalVR. It's a pleasure to be here. Thank you, Tern, for inviting me to come and present. Let me just pull up my screen and we'll start the video. So there we go, brief introduction to us. And now, yeah, so like I said, Richard Vincent is my name. I'm one of the co-founders of the business and the CEO here, and delighted to tell you a bit about FundamentalVR, our company, and the platform, our SaaS-based education and skills transfer platform, Fundamental Surgery. Some of you may have heard me speak previously on this, but delighted to give you an update today. We're all about disrupting the life science marketplace and really about accelerating products and procedures into market to help the life science customers and businesses to get adoption of their products, techniques and drugs faster. We do that using a number of different technologies, and I'll touch a little bit on these today, and you can see some examples of them in the screen that's up now. Haptic VR, which is the epicenter of our system. It's the gold standard of virtual reality skills transfer. I'll talk a little bit about that. I'll also talk a little bit about at-home VR, which is our standalone headset solution that sits within the platform, offering enormous scale potential within the blended approach that we have, and all of it with multi-user, which brings people together from all over the world into virtual spaces to learn, rehearse, practice, and be assessed. Ultimately, all of these things are about shortening the learning curve and really trying to get proficiency and effectiveness within end users, the surgeons that we focus on. And to talk about kind of the market drivers, this picture is probably a good place to start, because this image really reflects where the market has been and to a great degree is today. The way that surgery is taught really hasn't changed that much in 150 years. It's pretty much an apprenticeship type model. It involves bringing people together, as you can see here, to train around specimens. Those could be wet labs, so that's using animals for training. It could be cadaveric, which is using dead bodies or body parts for training, or it could be the live OR, where actually most of the training happens these days. And all of those environments have challenges attached to them, some ethical, some operational. They're all very slow in the terms of the way that skills are acquired. They're difficult to repeat. They're very expensive to use. And of course, over the last 18 months rather, during the COVID crisis, they've been pretty much impossible to deliver. Bringing people together in this type of way, as we all know, has been a real unusual situation where this might occur. So COVID really has changed the medical marketplace forever. We've seen that across all the digital channels, not just in our particular spectrum. You know, in ranging from consulting with your GP through to the way that training is delivered and assessed. It touches lots of parts of the ecosystem of the market, and it's worth just touching on that a little bit, if I may. You know, if you think about the sales forces, for instance, which are in traditional life science businesses, you know, they've been stopped in their tracks because of COVID. The traditional model of a salesperson traveling the nation or internationally and meeting doctors one-to-one, presenting product, presenting approach, showing case studies and validation. That again has been impossible to do over the last few months and couple of years. Even when it was possible to do, it was a real impediment to adoption because of the length of time that it took. These enormous sales teams are out there trying to get through the end users, the surgeons, as fast and effectively as possible. And what we know is that the market needs really effective training for new products and new procedures. And because of what's happened over the last year and a half, that needs to be contactless now. Those wet labs and cadaveric training sessions that I talked about before, you know, they've not been possible, and there's no real prospect of them being possible in any significant way over the next few years. So what we're seeing is a paradigm shift in the way that this type of skills transfer happens. And importantly, because of the journey that all of us have been on and the surgeons have been on, they're saying we don't want to go back to that old way of performing. We don't want to have to travel for a day to get 3 hours of training to then travel back again. We want to find a different way of doing it. Which means that the traditional masterclass approach, where I as a lead surgeon might have 10 trainees around me and I would then instruct them, that doesn't work anymore. We need to be able to remote people in, to bring them in to virtually come together to train effectively and efficiently. And all of this against a backdrop of complexity. You know, whether you look at the drugs marketplace, whether you look at the devices marketplace, or you look at the robotics marketplace, in any of those vectors, what we're seeing is increased complexity, which means increased learning curves, slower adoption, slower levels of confidence building. And so finding ways to really deliver the touch, the effect, the immersion, the experience, the cases in an effective way for real precision surgery, and often robotic surgery, but for precision surgery, where it's all about fingertip touch, is essential. And that's really been a massive market change that's happened over the last couple of years. I would go as far to say that 2 years ago, we were an inevitable innovation that the market could see was coming forward. Today, we are mission critical within the life science marketplace. It's a case of how the life science businesses are now using this type of technology, not if they'll use it. So to that end, let's talk about market size, the market that we address. It's a very large marketplace globally. According to Frost & Sullivan this year, they estimate that the total addressable market, the total market size, is about $16 billion. That's spend on skills transfer, on training end users, end surgeons and their assistants and their support staff on how to do and to be efficient and proficient in surgery. It's an enormous spend, and it's one that's increasing all the time. If you kind of narrow in on that a little bit, as we've done, and you look at the digital part of that market in terms of digital delivered surgical training and medical training, what you see is about 1.4 billion as the available market As I said, that is digital training using VR, AR, digital platforms, etc. And the bit of that market that we're really focused on is the bit where we can really differentiate using our haptic capability, the sense of touch, the weight and resistance that we can build in. And we see that as being approximately about 20% of that SAM. So our serviceable, obtainable market today is about $300 million worldwide. In 4 years, it will have grown to over $800 million. And the trajectory with the 25% year-on-year growth is onwards and upwards. And that's driven by that complexity, that innovation that's happening in the market and all over. So it's with that opportunity that's in front of us, and we're very focused on making sure that we take a disproportionately large size of that opportunity. It's with that in mind that we really put our value proposition out there into the market, and it is a unique value proposition. We're all about what we call haptic VR. This is the combination of virtual reality with the sense of touch and resistance and weight and pressure and force feedback to give you the simulation of interacting with a real patient, but in a virtual environment. With that haptic capability, we can really create precise skills transfer so that you can learn the capability before you go into an operating environment. That, aligned with more traditional ways of learning and coaching, makes for a really winning combination that all of our customers are really starting to understand now. And we are undoubtedly at the leading edge of haptic technology, and particularly its application within the medical sector, which arguably is the hardest place to replicate the soft tissues, the hard tissues, the dynamic tissues that are presented in a surgical environment. We provide those with collaboration and collaboration at scale. I talked about the fact that people can't cross a lot of those physical divides today, and also going forward are saying they don't want to do it again. Well, within our platform, we're able to deliver full collaboration to bring people together from across the world into virtual teaching rooms, virtual operating theatres, to learn, to practice, to rehearse. We can offer up the perfect patient case and the imperfect patient case, and allow you to repeat and trial, to do it correctly, and to see what happens when you do it incorrectly as well. All of that's within the capability of the technology platform that we've got in front of us. And what that allows us to do, as I said, is to really shorten that learning curve, to accelerate life science adoption through that precise repetition. And that has a direct impact on the adoption curve and the economic model of our customers. So to be a bit more specific in some of the use cases for that, I thought I'd just cover these key ones which are up on the screen now. So there are a number of areas that we focus in on, but starting from left to right on the screen you see here, Salesforce training. So every life science company, as I said, has a significant sales force that is disparate, is geographically spread, is hard to bring together, particularly at the moment. And they need to maintain their skills, to assess their capability, to know that they're able to deliver the right messages into their customer base, to guide them in the use of those products and those procedures. Well, that's where we come in. We can deliver them with very simple standalone headsets like the one you see here, or in the image up on the left. These simple, low-cost headsets which allow us to bring those sales forces together in a collaborative environment to learn, train, have very precise instruction and monitoring of their capability. Really, really effective. The second one is in sales enablement. So taking those sales team and putting them into their customers' environments without ever physically going there. So again, kind of collapsing time and space, removing the challenge of getting into hospitals in this COVID period. We're able to enable the sales team and their customer to meet in a virtual teach space, a virtual operating theatre. The image you can see here, you can just about see 4 or 5 different avatars of different surgeons from different parts of the world all coming together. This could be for training or for preparation, or indeed for a device run through or presentation. In the centre, you can see what I've been talking about as an overall piece here, which is kind of effective skills transfer. This is giving you the muscle memory, giving you the skills, giving you the capability to do it effectively before you touch a human. It's what I call pre-human competence, and it's the trajectory of the market. Not every use case needs it today, but in time, that will be the case. It's to give that, as Al said at the top of the meeting, to give that flight simulator for surgery. And importantly, this isn't just for novice. This isn't for first-time learning. This can be for lifetime learning, constant, continuous professional skills development, which is why we've gone out to many bodies and asked them to give us accreditation so we can actually grant continuous professional development and continual medical education points to the end users who use some of the systems. So effective skills transfer is really at the epicenter of what we do, and it's the place where competitively we are at our absolute strongest because we are unique in our haptic capability. Moving to the right, remote collaboration. I've touched on this a little bit more, but again, it's worth talking about a little bit more because this allows us to create those virtual environments where people can come together to share information, to prepare for a case, to talk as a team. We can even connect those environments up to live operating theatre environments so that we can bring feeds in and allow a two-way dialogue with a live operating environment. So lots of collaboration capability. Again, collapsing that time and space into one place where it's as simple as just popping one of these on my head and suddenly I'm in the space with colleagues, and having real presence where I can hand over a tool, I can annotate together with someone, I can talk as if I was standing next to them rather than talking into a screen. The final use case to touch on is R&D, research and development, and this really is about a byproduct of a number of the other things I've talked about. So because of the precision we have, we're able to measure capability, interaction, preference, use, handling of devices, tools, procedures, techniques. And from that, we can bring that data back and start to analyze it and use it as part of the clinical development pathway. We're also able to, with our customers, start to line up with them as they go on that R&D journey, that clinical development pathway, and help to prove the human factors around a particular technique that, again, can be of massive importance when it comes to approval of a new drug or a new device. And those are some of the really exciting areas that we're really starting to nudge into now. So this isn't just novices or medical students learning for the first time. This is consultant level, professor level, this is R&D, and all with this collaboration and haptic capability right at the epicenter of what we do is our unique patented capability. So that's the use cases. In terms of the places where we operate and the customers that we work with, well, you'll understand that many of our actual use cases are bound up in pretty heavy NDAs and are highly confidential. So I can't talk very specifically about any of the particular ones, but I wanted to give you a sense of some of the brands that are adopting our platform and using it today, and you can see a set of those on the screen now. I will talk a little bit about one of the fields of use that we have with Novartis. They're kindly allowing us to talk a little bit publicly about that one. But as you can see, across a number of different sectors, from gene therapy to robotics through to orthopedics, spine surgery, ophthalmology, we are moving the dial, increasing the speed of adoption, increasing the economic model for our customers today. And as we look forward to the future, these are the markets that we're really focused on. We're focused on regenerative therapies, so that's gene therapy and cell therapy, and how those are used. Now, a lot of them are intravenous, but where there's a surgical deployment, that's where we come in. That's where we can help, and often in the earlier stages of drug approval. Surgical robots. Robots are touching every single part of surgery at the moment, every procedural area. The learning curve on them is anywhere between 30 and 100 cases. So you have to take that out of the OR, and you have to provide another space where that can happen. And that's where our platform comes in. We're really excited about opportunities within the surgical robotic space at the moment. And then precision surgery, which I talked a little bit about before, but to put a little bit more colour on that, ophthalmology and interventional, those are the key growth vectors for us in that area, and we're really, really excited about some of the developments happening there. All three of these verticals are high growth areas at the moment for us and as a market. And what's key to all of them is our ability to deliver that sense of touch along with immersion that delivers true skills transfer. So to our commercial model, as Al said, it's all about recurring revenue. It's all about building long-term contractual value. We operate a fairly simple model. It has two areas of fee attached to it. We have an annual license fee, which is per field of use. So in a particular area, they have a license fee for the use in that area as a customer. And then we have a per instance deployment fee, which is basically every time our system is taken by one of our customers and given to an end user, a surgeon, and placed into their hands, that creates another deployment fee for us. And those are both annual recurring fees with long-term contracts attached to them that generate long-term recurring revenue. And importantly, and I've said this in the past, we are a pure software play. All the hardware you see is off the shelf. We're agnostic when it comes to hardware. We're a pure software play. In terms of our go-to-market, in just a couple of minutes, I thought it best just to talk about some of the ecosystems that we use. So there's really four key areas that influence the life science businesses that we're targeting. These are the 250 or so billion-dollar organizations around the world. About 70% of them domiciled out the US, which is our primary market. Looking at these four tiles here, if I look at the top left, advocates and end users, these are the end user surgeons who are picking up our tools and using them for skills transfer to learn capability. Leveraging them back towards our customers, the life science organizations, has a massive influence. The Mayo Clinic, for instance, are one of our investors and a long-term collaborator. Using their influence on those life science businesses is fantastic. And we seek to do that across the board with lots of fantastic end user organizations and advocates that we work with. Going down to the bottom left, key opinion leaders. Every life science organization has key opinion leaders that influence the design, the development, and the deployment of their product. We too have a panel, and you can see there very small images there of our own KOLs, key opinion leaders. We use them, again, to leverage into our life science customers to get involved with early stage development. The other key opinion leaders, just as Darren was talking about, inside the technology arena, again, really important in terms of our customers turning for advice and guidance in this new market. People like Gartner, Frost & Sullivan, we work very hard to make sure that we're on their radar. We've been published twice in the hype cycle with Gartner. Frost & Sullivan recently put us on their Frost radar ahead of all of our competition, and they've actually just awarded us the Entrepreneurial Company of the Year in Healthcare award as well. So we use those influences to help us with our market growth. Top right, associations and bodies, people like the Royal College of Surgeons, the American Academy of Orthopedic Surgeons become great benchmarks for us when we can get their accreditation and their validation, which we seek to do, and again, to leverage that back into the life science companies. And finally, the technology partners. We work closely with them. We're agnostic to technology hardware, but we work closely with all of them as an ISV to make sure that when they're having conversations with their customers, which are the same ones as our customers, they talk about us and they bring us into that. So that's the ecosystem. I mentioned Novartis earlier, and I just wanted to go back to that and just briefly give you a quick little bit of information on this particular use case, which we're allowed to talk about, just a few seconds. I'm going to run a video as part of this. Now, it's quite lifelike, and it's not anything too graphic, but just to warn you, there is a little bit of anatomy within this, but it is within the eye area. So if you're squeamish, you might want to look away. But just to give you some background, Novartis have an amazing product, gene therapy, an oncology therapy called Luxturna. It cures blindness in children. Quite phenomenal against particular degenerative diseases. It requires a pinpoint precision injection into the back of the retina to reactivate the photosynthesis photoreceptors in the back of the eye. Our system is the only way they can train this to consultant and professor level surgeons around the world. We're deployed in over 30 countries. We deploy remotely, ship our headsets in, and then provide them with the training to allow them to achieve the skills transfer to do this incredibly complex and incredibly high value procedure. And it's just one really good example of where we're working. And this is just one of the Novartis field of uses that we are working with them on. So to wrap up, final thoughts really just about the future. Again, recurring theme, product-led growth is our key message. We work with our customers to understand and grow within their need and use cases. Key things we'll be doing going forward over the next few months and this period is launching our robotics digital twins, lining up with our real focus on that particular market, providing for absolute replication of real-world logic and interaction within a virtual space. We'll be launching our enterprise multi-user product, and you can see some video of this running on the left at the moment. Shared spaces that allow customers to come in at a variety of price points, getting them onto the platform earlier, that allow them to interact and use different elements of our platform. We'll be launching software development kits, or SDKs if you like, to widen our ecosystem out, to again allow others to create and share content on our platform, so creating licensable and shareable content that they can use. And our final focus is really about geographical expansion, with a real focus on the US for the reasons I mentioned already. We'll continue to push that through over the coming months and years. So that's an overview of Fundamental, and I'll stop sharing my screen and hand back to Tim.
Well, thank you very much indeed, Richard, and thank you, Darren and Al, for your presentations. We've had a number of questions that people have been typing in, and as I mentioned, I've had a few that have been submitted ahead of the presentations this evening. Just so you know, there are one or two people who have submitted questions that unfortunately it's inappropriate for a public company to comment on, particularly in a forum like this, and certain matters have to be left to RNSs at the appropriate time. But I will try and go through as many as I can. We've had some specific ones on Tern and questions for both Darren and Richard, but I'll start with the Tern ones. A couple of points. I think Sarah or Al best placed to answer this. Going back to what I just said about what we can and can't say, we have had a number of questions on asking for detailed financial information on the portfolio companies and questioning why we don't actually release this. Could you comment on why we don't do it and what the position is, please?
Do you want me to start with that one then, Al?
Yes.
It's unfortunate we're not able to give detailed financial information on our underlying portfolio companies. There are a couple of reasons for this. One, that they are early stage entrepreneurial companies in exciting, fairly competitive markets where they are facing against other competitors who are not providing any of their detailed information at all. It can give some insight into their commercial progress, which would be damaging to them. So we're not able, for that reason, to pass on information on the underlying companies. Secondly, for our own kind of business case, really, when we are going in and investing in new companies, we are at times in competitive positions, and for underlying companies, if they feel that they will have to open their books by having Tern as an investing partner, it will make us actually becoming a partner with them very difficult, alongside the fact that we are increasingly trying to syndicate our deals with other investors, and again, many of those do not have or do not show the underlying performance of their businesses. Having said all that, we do understand that people do want to have some idea of the performance of the businesses, and that's part of the reason we are trying to show an increasing number of KPIs. Al went through ours at the interim period for these 6 months. We'll do the same again for an annual basis, so you get an idea of the aggregate success of the portfolio in its entirety in terms of its revenue performance, its growth in number of employees, but also ensuring that growth in employees is managed to drive through to accelerated revenue growth as well, and they're managing their increased size of team in line with that. So that hopefully gives you some idea of why we're unfortunately unable to give too much granular data.
Thanks, Sarah. One part of your answer there leads me neatly on to a number of other questions I've had, and these are for both Darren and Richard on competition. And Darren, I'll start with you if you don't mind. There's been a lot of talk about competition in your sector, and indeed the unique nature of Device Authority's offering. Is it correct to say that there is no real comparable product available for IoT security in the market?
Is it correct to say the last bit again?
That there is no comparable competitive IoT security product in the market?
Well, so the first thing I would say is that customers look to try and solve problems in a number of ways. Yeah. We've got IP and protected IP in our solution. One of the things that I notice that customers, whilst they focus on trying to solve the device challenge, also want to solve the data challenge. We are one of the only companies that can actually do that, but both sides. And then you have to really look at what are they trying to solve. Most of them don't know what they're trying to solve. But the competitive landscape at one level is, it has large enterprise cybersecurity vendors who are waking up to IoT that are potentially, partners, but also I like to call them collaboration partners, but also potential exits. And at the same time, you also get other smaller companies, who try and do things in a certain way. And I try to show it in my diagram. When you're looking at these secure by design, root of trust, there's many in that space. And in most cases, they're perpetual one-time only type companies. We're a software subscription, and really our revenues scale as devices scale. So hopefully I've answered that.
No, thank you. I think that certainly makes sense to me. And Richard, had a number of questions about competition in your sector. Obviously, you've got a very, very strong position in life sciences, but are you seeing other companies coming in and trying to replicate what you're doing?
Yeah, it's a good question. So if we look at the market from the standpoint of precision skills transfer, so that's a scaled capability for haptic skills training, we are by and away the leader and unique in that capability. In the broader space of virtual reality used in medical training, there's a lot of people coming into that space at the moment, often at very low levels, POCs and small developers. But I think most of the major organizations out there, the major life science companies, really look for quality and long-term resilience within the platform. And I think that's where we really come in. So we differentiate on haptics, we differentiate on our ability to build scale, and we differentiate on our ability to blend. So what I mean by that is to go from a standalone headset with very simple interactions and kind of procedural training right through to that ophthalmology gene therapy example where you are delivering a real precise experience that sets up an experienced surgeon for success.
Thank you. Which leads me on to a follow-on question. Given the unique nature of your haptics capability, is there the possibility to either license that technology to others for use in other sectors, or indeed fundamental VR in future moving into other areas?
So as I said in the presentation, I think we probably applied haptic technology to the most complicated and challenging use case that you could imagine. So moving that across into other sectors is certainly possible, and something that, and once we've really got our arms around this initial market, it's something that we would be interested to explore. where it's dangerous and the sense of touch is important, I think there's real application there. So I wouldn't rule it out at all.
Yeah, bomb disposal was one example that a questioner gave, for example.
Yeah, that's certainly dangerous in the sense of touch.
Yeah. Okay. Well, Richard, you gave some good examples of the scale of the market opportunity. Just turning back to you, Darren, one question that I've had actually a couple of times this evening is, can you give us an idea of the scale of the number of devices that are already being protected by Device Authority products? Are we talking about hundreds of thousands, millions, tens of millions? Is there a scale you can put on it?
Well, there is, and it is, potentially quite vast. But what I would say is customers don't like us disclosing, in terms of what they're doing on security groups and types and devices and volumes. And we're under NDA, with all of them typically to do that. But typically people go through a process of POC or pilot, and that's normally tens of or hundreds. And then once they get approval or business support, then they roll out to many thousands. And then I've talked on before about scaling of some customers, where they have plans to scale up to 50,000 plus in terms of, and then they've got multiple products. Yeah. So we're at the crest of that wave where, and I'm just, a couple that come to mind straight away could quite quickly end up being tens of thousands. And then if you look on the horizon slightly out, hundreds of thousands. Okay.
Well, thank you. It's giving people the idea of that scale. Yeah. I'm afraid I'm dotting around slightly, but that's the nature of the questions that are coming in. I've had a couple of questions, Sarah, Al, this one for you, regarding the OTC QB application that we put in a couple of months ago. Is there any comment you can give on progress there?
It's taking time, Tim. We were warned when we put the application in that it's taking longer than it used to in terms of going through the process. So the application is in. We're dealing with a few questions that come out of that, but it's in progress, and we're hoping we'll see an end to it soon. But unfortunately, that is out of our hands a little bit, but it is underway.
Okay. Well, thank you. Well, hopefully that's addressed that. I'm just looking at others that have come in. We've got quite a number of detailed questions here, but I think we've dealt with most of the ones that we can. Yeah, just one again for you, Darren, that a couple of people have asked, and that's about the routes to market and just a little bit more colour on selling, a Device Authority, a Keyscaler branded product, and also, do you white label and the integration with other people's products?
That's a really good question. So, as we build out our go-to-market relations, I'll just pick Microsoft. So customers who are wanting to buy from Microsoft really either buy from Microsoft directly, and they will want to use their marketplace because they're already consuming their cloud services, and they want to be able to add other things onto it. So that's one route, and we put that in place so we can make it again that easy for customers. But typically they're buying through large systems integrators, and they could be of all sorts. They could be solution-specific vertical partners or large, more global SIs. So people like Wipro, for example. So systems integrators is one channel. Microsoft is another. We sometimes do get drawn into dealing direct with customers, and that's their choice, but that isn't by design. But we're trying to create partnerships, so that's why BSI is a good example, and we've done a number of projects with Wipro, where effectively we're building an indirect channel so we can get one to many and leverage their customer bases and tap into their IoT projects. And I talked to a number of key business people in the SIs. They've now got their CISO customers or CISOs at their customers talking to them about IoT projects, and they're trying to figure out how they deal with their managed services portfolio 2.0 to include IoT devices. So we'll typically grow and scale through that market. In terms of the white label, absolutely yes. I mean, typically in that scenario, we would be embedded or OEM'd in as part of a solution. Some people are happy to say it's powered by Device Authority, for example. but others, you know, are really focusing on their brand equity, and we would be part of the bill of materials. So we can do either, and we're flexible to that.
Excellent. Well, thank you very much for that. I've just had a question which I think is probably a good way to end it, because I recognise we've only got a couple of minutes to go. This questioner asks, are each of you excited for the short and medium term futures of your businesses? So I don't know who wants to kick off on that, but it's something for everybody to say, just something short for the last couple of minutes is a good way to end proceedings.
Happy to come in first. I'm always excited, very excited about where we are right now. Like I said in the presentation, we've gone from innovation to mission critical. The market has woken up and adopted what we're doing, and it's a great time in this space. So we're really excited about short, medium, and long term.
Excellent.
And I would echo that too. And you know, I get excited when I hear good feedback, like certificate authorities having to build connectors to our platform, or customers saying this has been really successful in this project. We want to talk to you about these device types and these divisions. You know, that makes me feel good when you hear things like that, because that's positive validation.
Excellent. Well,
I'll jump in quickly so you can end on Al. But I think, I mean, having just said that we can't give underlying information on our companies, the one great thing that we are able to do at the moment is hear from, you know, Darren and Richard, and hear from the, you know, other 3 portfolio companies, you know, just a number of months ago, and you can see the progress they're making, and really have a bit of an insight into how they are progressing, and the kind of business models behind that. And I, you know, you can't help get excited when you hear them speak. So that's me.
Thank you. And Al?
I think from an excitement point of view, someone asked about competition and the uniqueness of the portfolio's offerings, you know, particularly Device Authority, but and Fundamental. But what's become really exciting for us is the recognition that Tern's companies are getting in the marketplace as leaders in the particular areas where they compete. And we also see that with NVMA, Wild, and Talking Medicine. So at this juncture of the journey in developing these companies and bringing them to market, we are now getting traction. Our revenues per employee are increasing. The MRR is increasing across the board. And it's from the hard work that the folks at our portfolio companies are doing. And also, I think the fact that each of our companies are targeting large markets with unique offerings, competitive advantaged offerings, that are helping them win deals and win new customers and new logos. So we see the rest of this year as being pretty growth oriented and pretty exciting for Tern and for the Tern portfolio companies. And with that, I'd like to thank you, Tim, for hosting us and putting this together for us, and all the shareholders out there. We really appreciate your interest, your support, and your questions, because they help us drive to better execution and better performance. And I think that's important for all of us. Thanks again.
Thanks very much, Al. And just to finish off on that point, if anybody does have any questions at any time, and I know, I do communicate with a number of you on a fairly regular basis, but any questions, please turn@investor-focus.co.uk, and we'll endeavour to answer those as we can. But I'd like to end by just thanking Darren, Richard, Sarah, and Al, but most importantly, everybody who's attended this evening, and we really, really appreciate it. Thank you.